So, good evening, one and all. So, yesterday I have taken basics of insurance, some information. Today, yesterday I'm unable to present the PPTs. So now hello, anybody is there? Hello. So, subject is introduction, practice of life and general insurance. Coming to this already covered in the last class. Again, I want to give a glance information. Insurance is nothing but converting uncertainty into certainty. So insurance is a protection against the financial loss arising in the happening of any unexpected event. So unexpected event can be for the life, can be for the property, can be for the health. That is the reason insurance will be divided into two categories. One is the general insurance, other one is the life insurance. Then coming to the fundamental principles of insurance, there are six fundamental principles of insurance. First one is the utmost good faith. So there must be good faith between the insurer and insured. Insurer is a person who is taking insurance policy with the insurance company. Insured is the person who is giving or offering the insurance contract, means company is the insured. So between them, there must be a good faith. To have a utmost good faith, whatever conditions are there in the policy document must be explained clearly to the insurer whether he asked or not. Second one is the insurable interest. Means you are insuring, whatever interest you are insuring, that will be called as insurable interest. For example, I am taking policy for my life. So my insurable interest is my life. I am taking policy for building. Insurable interest is my ownership of the building. I am taking policy for the motor car. Insurable interest is the property called motor car. That will be called as insurable interest. So insurable interest. So ownership of property, our own life, our own health, that will be called as insurable interest. Then coming to the indemnity. Indemnity means financial compensation sufficient to place the insured in the same financial position after a loss he enjoyed. So means whatever indemnity is nothing but a compensation, the compensation which is paying by the insurance company must be equal to whatever position that insurer enjoyed before that particular accident or the happening. That will be called as indemnity. Indemnity means compensation must be equal to the equal financial position before that unexpected event. That will be called as indemnity. Next one is the subrogation. Subrogation means claim, letter of claim. So letter of subrogation means vehicle theft claim, then damages claim, repairs claim, or totally destroyed claim, whatever, that will be called as subrogation. Contribution relating to the any insured may have several insurances on the same subject matter. Means one property, several insurance may be taken place. All insurance combinedly must be equal to the property. That will be called as a contribution. Next one is the proximate cause. Proximate cause means the active efficient cause that sets in motion a train of events which brings about the result without the intervention of any force stated or working activity new from a new and independent source. So which is nothing but, for example, some person is met with an accident. So he has not got that loss because of that accident. Because of that accident, other disease has come to him. Then that person died. Then That cause also because of that particular accident, so that will be called as a proximate cause. Original cause of that particular disease is this accident. Because of this cause, he died. So that insurance company has to pay the compensation to the insurer. Next one is the classification. Classification, first one is the general insurance, second one is the life insurance. Coming to the general insurance, property insurance, motor insurance, liability insurance, personal accident and health insurances is all the classification of insurances, general insurance. Property insurance is relating to any property about the burglary, engineering, or miscellaneous. Coming in the motor insurance, two-wheelers, four-wheelers, then commercial vehicles or personal vehicles, whatever. Liability insurance, employee liability, public liability, product liability, and professional liability like that. For example, employee liability means whenever a person is working as an employee in an organization, that organization will pay workman compensation fund at the time of anything happened to that employee, or at the time of retirement, some gratuity may be given. So that will be called as liability insurance. So for all employees, group insurance will be taken for the gratuity with the insurance company. So whenever an employee is retiring, that claim will come from the insurance company. That will be called as liability insurance. Last one is the personal accident or health insurance. Personal accident or health insurance. Nowadays, health insurance is very famous. So that need not to explain much. In future, we discuss about the health insurance. Then coming to the fire insurance covers, what kind of properties covers under the fire insurances? The first one is the building. Second one is the machinery and equipments, furniture, fixtures and fittings, finished goods, stock in transit, raw material. Buildings means civil construction of the buildings. Then machinery and equipment means the asset which we use to convert the raw material into finished products. Those will be called as machinery and equipment. Then in office, at a home, furniture will be there, tables or chairs or almaras, etc. Fixtures and fittings means those have been fixed to the walls, which cannot be moved, means cupboards, etc. will come under the fixtures and fittings. Then coming to the finished goods means total goods have been conversion of the raw material into finished goods completed. Those are saleable right now in the market, but are there in the godown? Happen something to that, fire accident occurs, that goods they have been destroyed, insurance will cover will come. Second one is the stock in transit. What do you mean stock in transit? I am transporting goods, finished goods from factory to the showroom, or go down to the showroom, or go down to the dealer, go down to the sales place. In during the transportation, any fire accident taken place, that comes under the fire insurance cover. Raw material also, you are purchasing raw material from one place and bringing to your uh, plant. In during the transit, anything happen, any fire accident covers. After reaching the godown, also you have kept the raw material in the godown. Fire accident taking place, goods have been damaged. That also covers by the fire insurance cover. Is anybody is there in the chat? Am I? Is my voice is audible? Hello. Then okay. So let's may go on the live stream. Okay. Types of risks covers under the standard fire special peril policy: fire, lighting, explosion, implosion, aircraft damage, right, strike, damage, malicious damage, storm, cyclone, tornado, tempest, hurricane, flood, inundation, impact damage, subsidence and landslide, including rock slide. This all comes under the risk coverages. Fire accident to lighting means thunders. Whenever heavy rains comes, lighting will come. Explanation, periputai, aircraft damage, any aircraft come under fall under the etc. This all comes under the standard fire special peril policy. This risk will be covered. Then burglary insurance, burglary coverage, the theft of property after actual forcible, violent and entry into the permissions by the person. So a person forcibly entered into your premises and has stolen some property. That will be called as a burglary insurance. Coming to the insurance sector, various types of insurance policies are there. Machine breakdown insurance, contractors all risk insurance, contractors plant and machinery insurance, boilers and pressure plant insurance, electronic equipment insurance. So five types of engineering sector insurances policies are there. Machinery breakdown insurance means machinery is there in the plant that gone went to breakdown, that the work has been stopped. Then that will be called as machinery breakdown. Contractors all risk insurance is nothing but the person who is called a contractor. Who called the contractor? The person who is construction of buildings, roads, dams, etc. comes under the contractor. This contractor 100% will have some machinery and equipment at the place of construction or where the is doing contract. For that also policy covers comes under the insurance. Then the contractor plant and machinery insurance. Boilers and pressure plants. So wherever some factories require the boilers, water boilers, then pressure plants means pressuring the air also. The electronic equipment insurance also will be there. So machinery breakdown insurance, the policy covers all kinds of losses due to accidental, electrical, and mechanical breakdown as a result of internal causes. That is a machinery breakdown insurance. Some extensions will be there for the machinery breakdowns, air freight, express freight, uninsured own surrounding property, third party liability. Third party liability is nothing but because of our accident, any other person who is not relating to our organization or the firm, that person also will get the claim that will be called as third party. Then insure surrounding property. So this is the machinery's breakdown because of machinery. Surrounding property also might be damaged. That also covers in this extension. Okay. Then machinery breakdown insurance already explained about that is air freight to express freight to insure own surrounding property, third party liability. Second one is next one is the contractors all risk. Contractors all risk is means wherever contractor is taking the contractor is doing his work in the contracting place, there he placed this plan to equipment, etc. Relating to that, anything happen that will comes under the contractors all risk policy. Then main extension of car risk policy is earthquakes. In what cases the policy covering will be there relating to contractors all risk. Contractor all risk will be called a car CAR. Because of earthquakes, anything happens. Act of terrorism, anything happens. Escalations taking place. Limited maintenance cover will be there. Extended maintenance cover. Clearance and removal of debris. Damage to owner surrounding property. Third party liability. Cross liability. Express right. Holiday. Overtime rates of wages. Contractors, plant and machinery. These all are the main extensions to the contractors all risk policy. Then coming to the boiler and pressure plant insurance. This property covers boilers of various kinds, pressure plants and vessels under the pressure, including fired and unfired against the loss and or damage due to the explosion or the collapse. So boilers and the pressure plants. Boiler means where oil will be means there's so heat water required. Their boilers will be there means boiling the required material. Pressure plants means only air compression pressures. So for them, anything happens comes under this also. So what kind of accidental coverage will be there for the boilers and pressure plant insurance? Damage to the others and existing surrounding property. Then damage to third party property and also personal injury. Express freight, excluding air freight to overtime holiday wages, so air freight to additional custom duty, escalation. It all comes under the boilers pressure plant insurance. The next one is electronic equipment system. It provides comprehensive coverage for electronic equipment. Electronic equipment, for example, we are having computers in our office. Those will be called as electronic equipments. So electronic equipment includes physical loss. Electronic equipment system will includes physical loss or damage to all electronic equipment and data media, as well as the increased cost of working resulting from the accidental and unforeseen physical loss or damage to the electronic equipment. Not only the damage of electronic equipment or the software, because of the damage, any other loss, delay loss is taking place, that also will comes under the covers by the electronic equipment system. Then coming to the motor insurance. So motor insurance policy relating to the motor vehicles, either motorcycle, two-wheelers, four-wheels, or commercial vehicles, own proven vehicles, whatever, they all comes under the motor vehicles. Liability only policy, package policy, these are the two types of motor insurance policies. Then what kind of risk covers under the package policy is indemnify the third insured against the loss, damage to the vehicle insured and its accessories, any miscellaneous act, terrorist activity, Wilson in transit by road, then landslide, etc. comes under the etc. coverage under the motor insurance. So motor in some features are there for the motor tariff. One is the insures declared value. Insured declared value is nothing but when you are taking policy for the your motor car or motorcycle, when the value of the that motor car or motorcycle will be estimated, and that value policy will be given. So some percentage of depreciations will be there on the motor vehicles. So insured declared values, insured declared company declared values. If your motor vehicle up to 6 months, 5% depreciation will be removed. 6 to months to 1 year, 15% depreciation will be removed. 1 to 2 years, 20% will be removed. 2 to 3 years, 30% will be removed. 3 to 4 years, 40% will be removed. 4 to 5 years, 50% will be removed. These are the uh, percentages will be reduced from the original cost of the machine, which is set by the manufacturer of the uh, that motor vehicle. Then some motor vehicle when you have taken insurance on the motor vehicles, you get the no claim bonuses also. No claim bonus is nothing but this year you have taken policy, nothing happened to your motorcycle or motor car, you have not claimed anything from the insurance company. So you have paid premiums but not claimed anything because of not happening anything. The next year you are taking a policy, whatever premium you have to pay, from that you will get the discount in the form of no claim bonus because last year not claimed anything. So that some percentage of discount will be given on the next year premium that will be called as a no premium bonus. So no premium bonuses will be like this. The first year not claimed anything, first year taking policy for the motor vehicle, no claim bonus will be zero. Second year, not claimed anything in the first year, 20% you get it. Third year, you will get 25%. Fourth year, you will get 35%. Fifth year, you get 45%. Sixth year, you get 50% discounts in the premiums because of not claim anything from the insurance company in the previous year. These will be called as no claim bonus. So come some aims add on there. Comprehensive premium rate discount up to 70%. Instant coverage, renewal coverage, claims management services and follow-up also will be there. The freedom of choice to select the insurer, you will have a freedom. Many companies are providing insurance. Previously, only new India assurance, only general insurance will be provided by the government only. Nowadays, Bajaj Alliance, Reliance, many companies are providing the motor car insurance so that you are having a freedom to choose the selected insurance. Cashless settlement of claim within 15 days after getting all relevant claims to proper. Cashless settlement means directly will be deposited into bank account. Exclusive expert of the claim analysis. So when you are logged for the claim, then insurance company person will come to your motor, will check the damages, then he will uh, calculate the claim. So exclusive support of for claim analysis. These are the aims add-on for the insurance. Then liability insurance, employee liability, workman compensation policy, public liability, product liability, professional liability. Employee liability, already given examples for the workman compensation fund, gratuity, etc. Public liability means so something happens, so you are doing something, some loss or some accident taking place in the on the road, then public property have been damaged, then public liability. For example, you are traveling to three APSR, TSRTC, then some accident taking place, TSRT is liable to pay something because there is a public property you are utilizing getting damages, so that you have to get the product liability, whatever product you are losing, that will be get professional liability also one of the liability insurance. So employee liability already explained, workman compensation insurance. Okay, public liability. This policy provides indemnity to the insured against the legal liability to pay compensation in accordance with the Indian laws, which covers the following. What covers the following? Accidental bodily injury to any person not being a member of the insured family or engaged in the service of the insured. Okay? Temporary labor, you can take it in the organizations. Accidental loss of the damage to the property not being property belonging to or in the custody of the insured or any person in the service of the insured. So property only motorcycle being insured. That motorcycle with other motorcycle not comes under the insured policy. Even then, that person will get the insurance claim. Okay. From product liability insurance, coverage of the manufacturer's liability for losses or injuries to a buyer. For example, I purchased a product because of default in that product, I got something loss, financial loss. Then company is liable to pay compensation to me for that purpose. Company will take insurance of that product in the with the insurance company. Defect product to defect manufacturing product to accidental death to bodily injury or decrease to any third party. Accidental damage to property belonging to the third party. All comes under the product liability. Because of this product, any direct loss to the purchased buyer and another any loss to the third party other than the buyer, then any damage to the property not belongs to the buyer insurer means other party also. Then coming to the professional indemnity, this policy provides protection for professional like doctors, solicitors, chartered accountants, architects, etc. Against their legal liability to pay damages arising out of negligence in the performance of their professional duties. So, doctor, for example, you are visiting a hospital to cure your disease. Then doctor said need to be operated. Something happened in the operation, that patient have died. Some compensation has to pay to that patient family. That will be called as professional liability. So that all doctors or chartered accountants, architects, etc. will take this kind of insurance policy, professional indemnity. Then next one is the fidelity guarantee. Fidelity guarantee covers financial loss sustained as a result of identity, which includes fraud, dishonesty, forgery, embezzlement, larceny, misappropriation, default, fundamental conversation, etc. Any malpractices relating to anything, then that will be called a fidelity guarantee. This policy is issued to the employers to cover the loss infidelity of employees occupying the position of trust involving duties such as handling cash keeping, or etc. So cashier is the person you might have seen in the banks. That person is stolen something, then insurance company will pay something that will be called a fidelity guarantee. Then money and cashier insurance. This policy intended to protect against loss of money. It covers the risk of loss of money, checks, postal orders, postal stamps by robbery or theft or any other cause whilst in the transit among the places to be redefined. It also covers cash in sale and cash in counter also. So while you are transporting cash from one place to other place, that cash are being lost in the transit, then this money and cash insurance policy has to take to cover that loss. For example, some security officers will take the responsibility of putting cash into the ATMs. So during the transportation of cash from security office to particular ATM, that van is attacked by some robberies and stolen the cash. Then that kind of loss covers by the money and cash insurance. Okay. Then Mediclaim insurance, risk covered, reimburse or cashless festival diseases or the accidents, health insurance. Mediclaims comes under the health insurance. So reimburse of cashless facility of what is the health insurance? We are taking an insurance policy for our health. If anything happen, any disease has come, we join into hospital. So whatever medical bill will be compensated by the insurance company. So you are paying premiums every year. If nothing happened, not join into the hospital, not went to the medical facility, then nothing will be given by the insurance company. But once you have got the disease, join into the hospital, then will be paid by the insurance company. So general age limits for the insurance. So age limit not below 3 months to 45 to 65 years. Some insurance minimum will be 50,000 to 10 lakhs. Nature of minimum is 50 below 50,000 there is no insurance policies. Below 3 months baby will not get the insurance policy. 3 months to 45 or 65 years. Some insurance will be minimum 50,000 to the maximum of 10 lakhs. Nature of treatment allopathic and Ayush. Number no claim bonus 5% every year. Family discount 10% to 15% every claim free year. Income tax benefit will be given for the insurance premium up to 2 lakhs per year. Cost of health checkup 1% of the sum insured after 4 consecutive claim-free years. Group discounts according to the group size. These are the general features of the insurance. General features of health insurance. So age must be 3 to 45 years. Above 45 years, premium will be more. Then some is for the insurance policy minimum 50,000. Then 2 10 lakhs also can be. Nature of treatment allopathic, Ayush. So homeopathic, Ayurveda will not come under the health insurance. Only allopathic will come. So if you are not claiming anything in the any year, then next year premium will get the discount that will be called as no claim bonus 5%. Family discount 15 to 10 to 15% every claim fee free year. Income tax benefit premium up to 2 lakhs per year. Cost of health checkup 1% of the sum assured. For example, you have insured 2 lakhs, then 1% of 2 lakhs will be 2,000. 2,000 will be given for the transaction claim for years. Group discounts also according to the group size. So most of the organizations will take the group insurance policies. An organization is having 500 employees. Combinedly, all 500 people combined, one insurance policy will be taken. So claim insurance premium will be paid by the company. So some banks are also offering every year 100 rupees will be deducted from each account holder for the group insurance policy. That will be called as the group discounts according to the group size. The bigger size group, big discount. Smaller size group, small discount is get by the companies. Then health insurance products. What kind of health insurance products are there? Individuals, family floater, group insurance, students, critical illness, hospital cash, senior citizen, top-up policy. Individual policy means each and individual will take a policy. For example, I am the person, only one person, so I am taking policy on my health. That will be called individual policy. I am having a wife with two children, depending people on me. For total family, I am taking a policy. That will be called as a family floater. Then group insurance. If you go to an organization, for employees are there, for example, 100 employees are there. Combined for all 100, then I am taking a policy. That will be called as a group insurance. Student insurance. For example, I am running in a college or school. Students will be there. So anything happens based on the number of students, I'll take an insurance policy. Anything happen in the classroom, the insurance company will get claim. Otherwise, a person is going to another nation to study for the study purpose. For that purpose, the student also will take the insurance policy. That will be called as student insurance. Critical illness. So long lasting illness will be there for the people, the individuals. For that critical illness and insurance policy taken, that will be called as a critical illness. Hospital cash. When you join into the hospital, when you join, you have to pay the cash. So instead of paying cash, if you take the insurance policy, that person will pay the cash. Senior citizen policies, those who cross the age of 61, retirement age. Top-up policy. I have taken already 5 lakhs policy based on my income, based on my interest. Now I want to extend for the 2 lakhs. So you are taking 2 lakhs more policy. You have to pay the premium. 5 plus 2 lakhs, 7 lakhs. The 2 lakhs will be called as a top-up policy. Okay. So these are the health insurance products. So health insurance features. Feature depends on the type of group, sum insured, age bracket, first, second, fourth year exclusion clause, first and 30 days exclusion clause. First to 30 days after taking policy, before below 30 days, before 30 days, so that policy will not comes under the execution. Okay, pre-existing disease. So while taking policy only, you have to declare any pre-existing disease is there. Okay, room rent ICU charge. So when you join into the hospital, what is the room rent? ICU charge also will be given. And post hospitalization. So before joining the hospital, some expenditure may be taken. After hospitalization, some expenditure related to medicines etc. will be taken. That also will cover under the health insurance. Then coverage day care procedures. Coverage daycare procedures, a daycare hospital. Then cashless treatment reimbursement. So instead of you join into hospital, you need not to pay anything, just submit your that card relating to insurance, health insurance, then cashless treatment will be given. Then reimbursement will be given the insurance company to the that particular hospital. Then claim sublimits also will be there, co-payments, cumulative bonuses, emergency ambulance charges, period of insurance, approximate number of lives for claims, claim settlements, mode of treatment, existing insurance, premium, section 80D, IT exemption, group family definition. This all comes under features. So what are the types of groups? Some insured, age bracket, 1 to 4 year excluding class do, 1 to 30 days excluding class do, pre-existing diseases, room rent to ICU charge, pre and post hospitalization, coverage day care products, cashless treatments, reimbursement, claim sublimits, co-payments, cumulative bonus, emergency ambulance charges, period of insurance, approximate number of lives for claim settlement, mode of settlement, existing insurance, premium. Section D under the IT exemption. Then group family definition. Group, what is the group? What is the family? There will be a definition. Next one is the Smart Scholar Insurance. These relating to the students. This insurance coverage risk will be student med claim for diseases and accident rupees 10,000. PA death cover for student 50,000. Permanent total disability student 50,000. Fee protected accidental death for payment to 1 lakh. Then ambulance charges 1,000. These are the smart scholar insurance. Same continuation with the premium per student per year is 100, including the service tax. Type of policy is group insurance covering all students. Insurer United India Insurance Company is offering that. Policy in the name of the execution institution. Health card for the each student. Then this is related to personal accident policy, death due to accident, permanent or total disability, permanent partial disability, temporary partial or total disability, accident mediclaim, weekly compensation, children education, ambulance charges, hospital cash. Then coming to the personal act, other benefits also there. So cumulative bonus will come when you have not claimed previously. Group discount will come. So in this cumulative bonus, 5% will come. Group discount also will be given based on the group numbers according to group size. 5% to 30% will come. Family discount will come 10% to universal risk cover. For all diseases, this will be covered. Features of personal accident. Basic cover is 120 times of the monthly income. 120 times of the monthly income. For example, you are earning 1,000. Then 1 to 1,20,000 will be your that policy coverage. Then wider cover 60 times of the monthly income, age 18 to 70 years. These are the features. So different types of accident and disasters: vehicle accident, road accident, lift to escalator accident, wildfire, forest fire that will be called, storm, tempest to hurricane, tornado, mining accident to mine blast, cyclone, hurricane, typhoon, fire accident, rail accident, ship boat accident, natural calamities, explosion, earthquakes, landslips, rock slides, lift accident, gas strategy, air accident, industrial accident, firework accident, flood and tsunami. snake bite from rabid dog, electric shock. It all comes under the accidents and disasters. Then term life insurance. This term life insurance is nothing but a insurance policy will be taken for the life for 10 years, 20 years, 30 years, like that. The term policy, term, 5 years, 10 years. Those 5 years, 10 years, you have to pay the premium. After completion of that, in that particular term, anything happens, then the risk coverage will come for the family. That will be called a term insurance policy. Protection against means in the term only you have to pay. For example, you have taken term insurance for 10 years. You pay the premium for 10 years. After that, need not to pay. But anything happens after that, then the coverage will come from the insurance company. So term life insurance protection against the unexpected. Term policy covers makeup for the loss of your income, covering financial loss, taking care of long-term liabilities, ultimate security for your beloved family, fixing some insured depending upon your age, income, liabilities, save income tax under the ATC, section ATC. There are different types of term policy according to your needs. So insurance policies for the low income family, this is very important nowadays. So home insurance, householders package policy, building 10 lakhs, premium 400. Contents 2 lakhs, premium 200. Private car policy, private car policy, package policy, 3 lakhs, premium will be sum assured 3 lakhs, premium will be 5,500. Personal accident, PA policy 25 lakhs, 2 lakhs 50, the 2,050. Health insurance, family floater, mediclaim 1 lakh, 2,315. Life insurance, time insurance 3 lakhs, 5,000. Total sum insured from every 71 lakhs. Then premium has to pay 15,965. This comes under the low income family. Insurance policy for the middle class family. Home loan 20 lakhs, contents 4 lakhs, private car 6 lakhs, selected 50 lakhs. The health insurance 4 lakhs, life insurance 50 lakhs, total 1 crore 34 lakhs. Premium will be 31,315. Insurance policy for the upper class family. Home loan 30 lakhs, contents to 6 lakhs, private car 12 lakhs, accident to 1 crore. Health insurance 6 lakhs, life insurance 1 crore, total 2 lakhs 50 crore, 2 lakhs 54 lakhs, 2 crores 54 lakhs, 59,800. This is the information regarding the basics of insurance. So in the next class we go for in the next class we go for detail into general insurance, life insurance, and insurance regulatory authority. So if any doubts, can clarify. If anybody is there, can clarify the doubts related to the basics of insurance.